Fears over the coronavirus and its impact on the global economy has wiped out $1.7 trillion in U.S. stock market value in just 2 days. And now members of the Federal Reserve are publicly commenting on the deadly virus. Our Fed expert Brian Cheung is back with us for more on this. So Brian, little by little, right, we're hearing from the Fed. Yesterday it was Fed Vice Chair Richard Clarida in Washington, D.C. What is he saying?
Yeah, so Richard Clarida, this is basically his first set of remarks since the market sell-off really began. He did speak on Friday, but not since we saw the Dow fall as much as it did on Monday and Tuesday. And yesterday at a conference in Washington, D.C., he said the disruption from the coronavirus could spill over to the economy. And I want to read you exactly what he said as well. He said, "We are closely monitoring the emergence of the coronavirus, but it is still too soon to even speculate about either the size or persistence of these effects or whether they will lead to a material change in the outlook." And for the Fed, the material change bit is really the most important bit. They've been saying since the Fed went on pause after its 75 basis points of cuts last year that it needed to see some sort of material change in the outlook, not necessarily referring to the coronavirus, but any macro shock before they would want to change on where they are with interest rates right now, at least through 2020. So does the coronavirus really fit that profile? At least Clarida saying yesterday, not yet.
Any talk out there that maybe there could be an emergency Fed meeting? And would that actually maybe inflict even more pain on the market because people would say things must be really bad if the Fed has to hold an emergency meeting?
Yeah, well, we actually had former Minneapolis Fed President Narayana Kokerlakota publishing an op-ed in Bloomberg that was on Monday where he argued that the Federal Reserve should hold an emergency meeting outside of its schedule. Its next scheduled meeting is actually on March 18, but he's saying they should call it earlier and then maybe enact a 25 basis point cut or as much as a 50 basis point cut right now to hedge the U.S. economic effect of what might be a spillover from the coronavirus. Now, no one inside the Federal Reserve is saying that, and an emergency meeting would be fairly unprecedented, but at large, it seems like markets are expecting heightened increased chance of a Fed rate cut in the Fed's next meeting on March 18. When I was last checking, it was about 26% chance when you're looking at Fed funds futures contracts of a cut in that meeting. And by the April meeting, the markets are pricing in a nearly 50% chance that we'll have at least one 25 basis point cut by then. Whether or not the Fed delivers on that is another thing. When I listened to the Fed speeches from Clarida, there was also Loretta Mester and also Dallas Fed President Robert Kaplan. They had commentary earlier this week. Neither of them really hinted that, at least for right now, they see a case for cutting. They say we want to be patient and see exactly how this is going to impact the U.S. economy before we act.
We haven't heard from Fed Chair Jerome Powell yet on this.
Not yet, so we'll be watching.
All right, thanks a lot, Brian.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.